The AI bubble could potentially be worse than the dot-com bubble, at least according to one expert. OpenAI turns to Google for its hosting. Broadcom takes a second shot at making partners hate them. Delta adopts a new pricing formula using AI, and guess what? It's not in your favor. And Canada's Internet Registry has some key insights on everything from AI adoption to purchasing habits. Welcome to #Trending. I'm your host, Jim Love. Let's get into it. A new report from a top Wall Street economist warns that the current stock market rally driven by AI optimism is more extreme than the peak of the 1999 dot-com bubble. Torsten Slok, a chief economist at Apollo Global Management, said investor expectations around artificial intelligence have inflated the market to dangerous levels. His data shows that the price-to-earnings ratios, or PE ratios, of the top 10 stocks today are even higher than they were at the height of the dot-com mania in 2000. Slok writes, in 2025, the PE ratios of the top 10 companies are even higher than they were at the absolute peak of the dot-com bubble in 2000. And those top 10 firms, mostly large-cap tech giants, have become the main engine of the U.S. stock market. Their gains are masking weaker performance elsewhere, and their valuations are being driven by unproven hopes about AI's economic impact, at least according to Slok. Investors are treating AI as if it's already delivered a productivity revolution and unlocked trillions in savings. In reality, most of those benefits haven't materialized yet. As Slok puts it, in 1999, the internet was real. It did change everything, but that fact did not stop investors from wildly overpaying for companies that could not deliver on the hype. He warns that the current market is fragile, not because AI isn't real, but because expectations have outpaced results, and the rally depends on continued perfection from a handful of firms. If history teaches us anything, Slok writes, it's that bubbles do not pop because their technology is fake. They pop when investor expectations dramatically outpace reality. And with so much riding on a few overvalued tech giants, a small stumble could shake the entire market. If it weren't for the fact that I'd take a copyright strike on YouTube, I'd be playing B.B. King's "The Thrill Is Gone" as the intro to this story. OpenAI has started running core parts of ChatGPT on Google Cloud, you heard me right, not on Microsoft Azure. More evidence of how big the gulf is becoming between the former partners. Despite Microsoft's multi-billion-dollar investment and deep Azure integration, OpenAI is now using Google Cloud's custom chips to power part of chat infrastructure. Google confirmed the deal on Tuesday, saying OpenAI is using its TPU v5P chips, which are optimized for large AI workloads. This is the first time OpenAI has publicly acknowledged running major workloads outside of Microsoft's Azure platform. The shift comes as OpenAI seeks more computing power to support ChatGPT and its enterprise offerings, a demand that may be outpacing Microsoft's infrastructure. But it also follows recent signs of a strain between the two firms, including reports that Microsoft was caught off guard by OpenAI's ChatGPT search launch, which competes with its search engine, Bing. Google, once seen as a direct rival to OpenAI, is now a supplier, suggesting OpenAI is willing to partner wherever it can to get high-performance chips and scale. Neither company disclosed the size of the deal, but Google said OpenAI's workloads are already running in production on its hardware. This shift sends a clear signal. OpenAI is no longer locked into Microsoft's ecosystem. But it's more than that. By selecting Google's infrastructure, OpenAI is providing an endorsement of one of Microsoft's biggest competitors, which is even more of an issue because it means that Google has something valuable enough that OpenAI would embrace its own competitor. That's gotta hurt. But with growth depending on scarce compute, infrastructure loyalty may now take a back seat to availability and performance. Watch this space. Like any relationship gone sour, there's a potential for further drama here. Broadcom is rebooting VMware's partner program for the second time in 8 months, sparking fresh frustration from resellers and integrators already reeling from previous changes. The new invitation-only partners program announced this week limits access to a smaller group of select resellers. It replaces the earlier Advantage program introduced in December, which itself had caused chaos by abruptly terminating thousands of partner contracts. Broadcom said the new invite-only model is designed to simplify operations and drive sales through smaller numbers of strategic partners. But many in the channel see it as yet another move to cut them off. As one consultant told the Register, "We were invited into the last new partner program, and now we're out again." The sudden change left smaller partners uncertain about their status, with no clear process to apply or qualify for the new tier. Some say that they're now considering alternative platforms like Nutanix or Hyper-V to avoid repeated disruptions to their business. This comes on top of other unpopular moves like the end of perpetual licenses and VMware's shift to subscription-only pricing. Broadcom's ongoing reshaping of VMware looks less like streamlining and more like scorched earth, with shrinking partner trust and a narrowing field of survivors. And with every reset, more of the channel starts to look for the exits. Delta Airlines is reportedly working on a new AI-driven pricing model that could end fixed fares and replace them with prices tailored to what each customer is likely to pay. According to Fortune, Delta's executives say they want to move away from set ticket prices and towards a system that uses artificial intelligence to determine how much each individual customer should pay based on their browsing, booking patterns, and willingness to spend. The goal is to extract more revenue per seat by predicting the maximum price each flyer will accept, a practice known as dynamic personalized pricing. Critics argue this is algorithmic price discrimination, a model that's already caused controversy in the rideshare industry where prices can vary dramatically for the same service. Delta hasn't confirmed a launch timeline, but its CEO has said the airline is investing heavily in data science to drive customer-centric innovation. And this could mean two people on the same flight, booking at the same time, might be offered radically different prices with no clear explanation. Consumer advocates warn this shift could make fare comparisons nearly impossible and could disproportionately affect lower income or less savvy travelers. If AI-driven pricing becomes the norm in air travel, the idea of fair market price could vanish, replaced by a system where what you pay depends not on cost, but on how much the algorithm thinks it can get from you. A new report from the Canadian Internet Registration Authority shows Canadians are embracing generative AI, but they remain deeply worried about misinformation, deepfakes, and online safety. It also reinforces that the Canadian phrase "elbows up" has gone digital. Canadians vastly prefer to purchase from Canadian online retailers. The 2025 edition of CIRA's State of the Internet report reveals that the use of generative AI has more than doubled in the past year, with 1 in 3 Canadians now saying they've tried AI tools. Despite that, 74% are still worried about AI-generated fake content. Some of the key points: public trust in X continues to erode. It now leads all platforms in being associated with misinformation and polarizing content. Perceived safety on X has dropped 20 points since 2018. Even so, only 5% of Canadians have switched to alternatives like Blue Sky. Deep fakes are spreading. 1 in 3 Canadians said they've encountered a deep fake in the past year, up from 20% in 2024. Most Canadians want action. Nearly 80% of respondents support banning deepfakes from social media, and 59% see them as a threat to our democratic elections. Cyber attacks are personal. 1 in 5 Canadians say they've been the victim of a data breach, mostly through companies they use. And elbows are up digitally. 64% prefer to shop from Canadian retailers online, and over half say the .ca domain signals a trusted local identity. Even as Canadians explore new tools like generative AI, The findings show a population increasingly wary of digital risk. The full CIRA report is available at cira.ca. There's a link in the show notes at technewsday.ca or .com. Take your pick. And that's our show. Project Synapse is back this weekend with a lot to talk about in what's been happening in AI over the past 2 weeks. Catch me, Marcel, and John on Saturday morning or whenever you listen to long-form podcasts. I'm your host, Jim Love. Have a fabulous Friday.